Back on Morning Movers, another look at Micron. That stock hit an all-time high just last week. It's rallied 81% in the past 52 weeks. Analysts are expecting a Q4 adjusted EPS of $2.82 on revenue of more than $11 billion. That would imply year-over-year EPS growth of nearly 140%. Time now for Options Corner. Joining us to take a deeper look at this chart, we've got Rick Ducat, lead market technician. All right, Rick, tell us about the trends that you're paying attention to here.
I mean, you know, Micron versus the broader sector looks pretty darn good here, up about 76% during the past year. Broader market only up about 17%, and outperforming the rest of the chip sector here as well. All these companies, Micron, Nvidia, Intel, and AMD, they all make computer chips here, but you know, Intel and AMD are the laggards of the pack here. What is different about Micron? Why is it outperforming so much? Well, these other companies make computer chips that are CPUs and GPUs, like kind of how powerful the computer is. But on the other hand, Micron makes storage. So look at the storage companies here, Micron, Seagate, and Western Digital. By this picture, Micron is actually the laggard of this explosive storage sector. So some interesting food for thought there on, you know, the differences in these computer chip makers here. So if we were to look more specifically at Micron here, we can see that we had a series of ascending lows, higher and higher lows here, consistent resistance here at around 128. Then our big breakout. For now, though, some levels to watch to the downside. 147.61 is our low point after our gap up. 170.45 is our high point here. Notice RSI, our measure of momentum, slowing down somewhat here, but still remaining in the overbought area. If we were to look at our other studies here, we can see a bit of a volume node here with our short-term 9-period exponential moving average comes in right around 156. Finally, to look at the expected move for this expiration here, we can see 156 to about 150. That's where the expected move starts to dry up here, 149.30. And to the upside, though, there's still some room to run here. So 155 to 150 to the downside.
All right. Thank you, Rick. Appreciate that. Now take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, what's the approach for an example trade on this one?
Well, implied volatility really elevated at this point, especially in the near-term options, due to the fact that it's hitting all-time highs up, you know, nearly 100% so far this year. You got to take that into context. It's overbought on a technical basis. RSI is above that 77 level. Option market pricing in about a plus or minus 10% move either way. So that's reflective of that higher uncertainty going into the report. So I looked at a strategy that is the don't be a hero type of strategy, just because expectations are so elevated. Remember, August 11th, the company came out and raised this quarter's guidance mid-quarter, so they gave that update. So the expectations are high, and we've seen a lot of price target hikes. So I went out to the September 26th weekly cycle, so just 3 days to expiration, really short-term positioning for this earnings type trade. We're going to sell it out of the money put vertical for that neutral to bullish stance to take advantage of that higher implied volatility. We're going to sell the 155 strike put, and then against it, to make it risk defined, we're going to buy the 150 put. So short, neutral to bullish, $5 wide put vertical. You're going to collect roughly, if the stock opens up here about 166, about $1.40 credit. The credit you make is what or the credit you collect on this is what you can make on the trade, $140 per spread with about $360 in risk, but that's all the way below the 150 level here. If you collect that 140 credit, break even on this one, about 153.60 to the downside. That's about 7.5% from the current share price in there. So it's within that one standard deviation move that the option market's priced in, but you're still giving yourself a better probability of success. The probability that that short 155 strike will be out of the money at expiration, which is what you want, right? You want to collect that $1.40 credit, $140, and let it go out worthless. It's about a 68% probability of finishing out of the money. So you've got that probability in your favor in this type of neutral to bullish short put vertical.
All right. Thank you, Tom. Thanks. Appreciate that.